the best point possible. I don't want a CEO. I don't want to have to trust anyone. I want to be able to trust math. I want to be able to trust in value that's backed by energy.
What if Satoshi has some backdoor way to blow up the entire Bitcoin
If you're
system?
asking that, you don't understand Bitcoin.
Sorry. So I want to quickly go back, Robert. It's a pleasure to have you. Your experience, CEO of UBS Americas. I'd love to get your thoughts first on the discussion in general, but especially the discussion about Signature and why people left Signature. Because I'm genuinely curious as to why they left the bank, and I'll use that answer to kind of make a judgment on the risk for other banks that could be doing the right thing.
And Mario, thanks for having me on. I think the last couple of days, your conversations have been incredibly insightful. So I was at the Lehman crisis, brought in by the New York Fed that weekend. I was overseeing UBS. And, a few things. This is nothing like it. I know some people have commented it's like it, it's not like it. And I think there's a few things to just make sure everyone's aware of. I mean, first of all, some people are making comments about FDIC. Yes, it's private. It's a tax on the banks. And they will continue to grow that tax on the banks to cover a lot of these things. I think the term bailout is semantics, but there's a few things that were done that could be done again. I mean, in 2008, there was the transaction account guarantee program. So if this was, a normal circumstance, which it wasn't, because 15 years ago, we didn't have digital finance and we didn't have social media when I was sitting there that weekend. So we couldn't have had a withdrawal of $42 billion in a day. But if someone was always concerned about, let's make sure we can pay payroll, that's what this transaction account guarantee program was. They increased the FDIC levels to make sure that companies could make payroll. So that was taken away and now has to be reapproved by Congress because it was deemed that the FDIC at that point did their jurisdiction. But there were tools that we used in 2008 and 2009 that we could use again. I would say, number two, these three banks that everyone's talking about, Silvergate, Silicon Valley Bank, and Signature, couldn't be more different. But what happens is, I hate to use UBS as the example, in the worst of times, people will say, I'm going to go to Goldman Sachs because if they can't do the deal, then it's okay, my job won't be in jeopardy. We used to lose those type of deals during the tough times, UBS versus American firms. And I would say this is no different. There isn't a risk manager at a company that's not being asked, should we keep our money at Signature Bank or Republic Bank, or, should we take that risk? And even though right now everyone's saying, well, all deposits are really theoretically been guaranteed. That's the unintended consequence of approving, two banks' deposits. No, that's not accurate. Right now, they've guaranteed the deposits of two banks. That's it. It feels like likely there's going to be this moral hazard of a third, fourth, fifth, and sixth, but we don't know. And people forget, Bear Stearns was saved. Lehman Brothers was not. I walked in that weekend, and on that day, Paulson walked in. First thing he said is, we will not bail out Lehman Brothers. So we had to have a private sector outlay for that. And the government wasn't going to be involved. So, you never know. I hate to say in this environment of, government sometimes picking winners and losers, you never know which side you're going to be on. From that day on, all of my money has been at UBS and JP Morgan. And anything that's away from that at some of the minority banks I want to support are $250,000 and below. So what happens with Signature Bank? Today, managers are saying, okay, we saw Silvergate, obviously crypto exposure. Who's that next possibility of crypto exposure? I know someone said, well, they only had 15% or 25%. It still had more than most other banks in that competitive space. So they're the next one people are looking at. Some people say, okay, what's the next bank that, lent to mainly venture? That's that next bank. Remember, if you're not diversified, then you become a risk. First it was crypto, then it became venture, And these are the risks that every manager at every company is saying about their working capital. The second thing I may add, and I'm happy to take questions, it's amazing to me that no one's talking about sweep accounts. Most deposits are not in a checking account. Most deposits are in a sweep account. So they get their day-to-day needs for working capital, and the rest they sweep in a money market account. So if you look at what happened with BlockFi, if BlockFi didn't announce that their, whatever it was, 25 million was in a money market account, they would say, oh my God, there may be a discount. Money market accounts haven't broken the buck at all. So I just think there's a lot more to the story that experience has given us. I hate to say, this is a question, this is really about social media and digital finance kind of running faster than a government can run, running faster than a bank can sell assets. It just ran fast. This is not the same at all the other regional banks. I heard someone talk about, a Chicago bank. They're much different. Not every bank's built the same. So I'll pause there, Mario, but I appreciate that you let me give some insights.
So, Robert, I've got a few questions.
Yeah.
I mean, one of the discussions which you must have heard was, and I think Jay and Raphael kind of basically came to a similar conclusion on this. But the point is this: we live in the social media age where information is moving very fast. And the only thing that's going to happen is information and data is going to travel a lot more faster. So we can't stop that or curtail it. And so therefore, based on that, if you look at what's happened with Signature Bank, most likely it occurred because of fear, but it was also because information traveled fast. But what Jay quite importantly highlighted was that the reason why it specifically impacted Signature as opposed to other banks was weaknesses that they already had in their diversity, in their portfolio, in the way they ran things. So doesn't this go back to the same point that when banks are not just doing a good enough job, when they're not making sure that they're strong enough, then they should be allowed to go down, and people should focus and put their money into more stronger banks, as per what you have done?
Yeah, I mean, that's a given. I can only tell you, when I was running UBS and we were there the Lehman weekend, we were the first bank to announce $1 billion loss. We had 2.3 trillion in assets, and we were 35 times leverage. So we were the largest S&L in the world, you can argue. And we got incredible deposits because we were the largest private client manager in the world. So of course we had that liability stream. A lot of our competitors did not. But we also actually used IFRS accounting versus FASB. So we had to mark to market all of our derivatives. So when we took the first $1 billion loss, we didn't understand, why isn't Deutsche taking a loss? When we took the first $10 billion loss, we didn't understand why Credit Suisse wasn't taking a loss. So one, you have to know, like all of you, you're all smart people, you have to know kind of the detail of the different banks. Number two, Signature was clear. They were going into the crypto space. I know that at some point, November of 22, they were like 20-something% of their core deposits came from crypto type clients. And I think it did shrink after that. But let's be clear. I think that you have to own your own narrative. You have to explain why you're different, what you're trying. 100+ billion to north of 200 billion. When your stock's going down and your assets are going up, the first thing you do is stretch for profits. It was clear that they moved from treasuries to longer duration mortgages. In a rising rate environment, the duration of mortgages extend, the prices go down. This was not rocket science, people, that we had a bank in trouble. I do think the regulators should have been on top of it. That's for a whole different discussion. I think with Signature Bank, they were just the next in line that had this type of lack of diversity, even though they had better diversity than certainly Silvergate.
And just to point on what you said, you're quite right, because wasn't it the case that they were working to try and sell assets, to sell their assets on Wednesday and Thursday before the information leaked. And part of the reason was because they hadn't done their due diligence. So again, slowness basically causes the bank to go down as well.
Yeah, absolutely. I mean, I mean, listen, no one can sell assets as fast as 42 billion withdrawal of deposits. Let's just be clear. That would be very difficult to do. I would also say they could have easily done a deal simultaneously with announcing the loss 48 hours before that, 72 hours. They could have gotten some venture and private equity firms to literally buy, the stock at a 30% discount plus warrants. And they could have, I mean, we're talking, in my opinion, about mismanagement of communication and narrative. There is no reason that this bank went under. Okay, they shouldn't have gone under on a $2 billion loss. Yes, there was probably going to be deposits pulled, but you could have easily raised money for a type of franchise like this.
So why did they go under, Robert?
I think they went under because, honestly, their narrative was wrong. They announced the loss before they had the funding done. Rumor has it, I think they had 500 million of 2.5 billion done, but supposedly they couldn't get the mechanics done on closing the deal. But that's stupidity, right? You could have paused on the loss announcement. You could have waited a day. I think we all sign NDAs all the time and look at big boy letters all the time. So there was a different trade here to do. And talking about this whole idea, someone earlier was talking about, well, does that mean everyone's guaranteed? And, obviously I have a lot of respect for Bill Ackman, but if you look at how I responded to him, if you want all the regional and community banks to have all of their deposits guaranteed, then we are saying that we want those banks to become a utility, in my opinion, and we have to relook at how we look at their risk and profits, because you can't have it both ways. You can't have your risk backstopped, but then you get to retain profits without some sort of risk metrics and capital adequacy. So, I think we're going down a slippery slope here on things that some of the people I'm hearing are asking for.
And Robert, you've actually hit the nail on the head on an issue that actually concerns most Americans, because the concern is this, that actually now that they've basically almost given unlimited insurance for these two banks, they've almost set a precedent that if a third bank, let's say the First Republic goes down, they're going to have to basically help them out. So that's the first question. I mean, from a logical point of view, let's say on Wednesday, First Republic was to go down, they would probably do you think they'd have to move in? And that's the first point. And the second point is, if now they've created this pop issue, which, as you said, Bill said, it should be unlimited. When you're basically protecting unlimited banks for the unlimited amount of money, that's like trillions of dollars. Is that sustainable?
I wouldn't before you answer, Robert, answer, just first, breaking news, for anyone in crypto, the Justice Department is now investigating Do Kwon's Terra stablecoin. So it's a positive development, in my opinion. Robert, as you answer the question, just want to make it clear, Sulaiman, like the no one is protecting the shareholders. It is just the depositors.
We should be very clear. I mean, which is why I haven't used the term bailout, although I should tell you on TV today, Sheila Baird, former FDIC, used the term bailout. I was on TV with Mohammed Al-Arian. He said we've already moved to where everyone has a guarantee. I have not said either of those yet. So a couple things. I think when we use the phrase bailout, it's just semantics. I think depositors would have gotten 100 cents on the dollars anyway. And I think what the Treasury and the Fed and FDIC just did a faster, orderly liquidation. I actually think that the depositors would have already been whole. So I don't really think there was a bailout, although I think that's semantics. And yes, the shareholders and the debt is, obviously, the shareholders are toast. My guess is there'll be a clawback of any sales, the proceeds of the sales made by management. With respect of what's next, well, if the next bank goes next, my guess is it's hard to not protect the depositors. Do you hear me or not?
Yeah. Sorry, though.
Okay. So if the next bank goes,
and that would be a very difficult thing, but I think that's a slippery slope, because otherwise, at that point, we're talking about going to Congress. We're talking about setting up a totally different facility. I think there's north of something like 15 trillion in deposits. our overall GDP is, call it, 25-ish less plus. Some people say it's in the 30s, but let's just say it's, 25. There's no way that we could tax the banks enough, okay, to cover 15 trillion of deposits. So we're talking.
So Robert, real quick, this is Raphael. I just want to ask you one thing. I saw you today with Mohammed that you brought up, and I noticed that he also said that this is Pandora's box, and there's no way that he sees how it cannot turn into a large political issue, and more to that, generally speaking, how they can stop at these two, because First Republic, death is knocking on their door, if even after the 70 billion liquidity injection and all that. So, and there's so many. There's Westpac, there's Western Alliance Bank, there's a couple of them out there. Why do you think that is? Couldn't they say, listen, there's two here. We have the Treasury swap program. You bring in the bond, and we'll give it to you at face value, and there's your liquidity there. We did two. Why not draw the line here?
Yeah, by the way, I think they could say that. I'm the one that said, hey, listen, Lehman did get protected. I've been in an environment where you are not protected. I think they'll work like hell to get a private sector, takeover. And I think if they had more time, they would have had that with Silicon Valley Bank, is my guess as well. But, time wasn't their friend when, and that's the same thing with the Lehman crisis. Time wasn't our friend. We thought we had a deal Sunday night. The UK said no to it, and then all of a sudden we open up Monday morning to the most contagious environment we've seen ever. So one, I do think that there's a chance that they take a step back and say, hey, we've given the facility, and really the facility is just an extended discount window that you don't have to pay, a toll for, right? You're getting one for one. So that's one. Number two, my guess is there are going to be, possibilities of mergers and takeovers, that are already being in discussion. So I'm not sure they're going to go down that road. Number three, I do think there's always political rhetoric, right? Most of I advised Obama, and I'm close to the Biden administration. I mean, there's always a moral hazard and unintended consequences on whatever you do. You see some of the officials, like I think it was Nikki Haley, calling it a bailout, or Tim Scott making. So anyone who's running for Senate, for Congress, for president, there's going to be one side or the other. In my opinion, and this is not being political, I think they threaded the needle on Sunday night. I think as we've all said, they've never been in this environment where the news is moving faster than them. They didn't know what they didn't know when Monday morning was going to open, and I think they did the right thing. I think, to your point, that doesn't mean they have to do it the next time around. They put in this facility. Also, First Republic got, I think, 70 billion of a facility as well. I mean, we're saying their demise because of a stock. That doesn't mean it's their demise. Just because the stock has lost an incredible value, that doesn't mean that they're toast.
Robert, we know you're close with the Biden administration. Do you think if you ask them if we changed FDIC to KIEV, we'll get unlimited funding? Is that a possibility?
Well, I don't speak ever on behalf of the Biden administration, so let me make that clear. And I have no idea what they think, but I think fighting for democracy globally is a much different conversation than saving a regional bank.
So Robert, I've got a question from a banker who's on our stage earlier, I think yesterday. I've been listening for 3 days. First, actually, before asking the question, want to ask you another question. We're talking about how information spreads fast. You were on TV earlier, and you're always on TV. Give us an idea of the impact of spaces like this, because I know you've been listening earlier as well, and that speed of information. I'm asking this for every special guest we get. I'll ask this question to Michael Green in a bit as well. What's your experience on the space and this new medium of information?
I mean, I think what you're doing is you're picking that back up for everyone. I'm not saying there's everything I agree with Mark Cuban or Bill Ackman, but if you can listen to them, take everything you can. I like to think if there's one thing you can take away from my conversation today, that's one more thing than you had going into it. I think this is a great forum. I think that I think there's a lot of diverse views right now. I think there's a lot of anxiety. And Mario, I think the one thing we have to do is make sure that if facts come out that are off base, we probably going to have a fact check with you, because I do think that so many people are listening and so many people view these insights as sometimes gospel. We just need to make sure that, when I bring up something like, the transaction account guarantee program, that's something that's factual. When I bring up sweep accounts, those are things that are factual. Those are some things people aren't talking about. So I do think, someone made a comment, the FDIC is, government is backed up by the government. No, I think it's good that they were told no, it's actually the banks do it. I think equally, though, banks can't afford to guarantee all of the deposits. So I do think we have to just make sure that, I think you're doing a great service. And I think in this post-COVID environment, I think a space like this only grows.
Hey,
So
Robert.
Just to add to that,
Grant,
Robert.
just quickly, guys.
Just 1 second, Mario. So just to add to that, Robert, what's like, not just because I'm a co-host on this, but what makes this Twitter space very important is, as you said, we've had people from diverse backgrounds, diverse positions. It's essentially a space where you can hear views from everybody, something you don't get in the mainstream media, something you don't get elsewhere. And so that's why I think it's important, and that's why we've had people from both, as you said, from the Dem side, from the Republican side.
I want to be clear. I was president of UBS before I was advisor to the president. So I am a capitalist, true and true. Anyone who's heard me, on TV, I don't make capitalism political.
Hey, Robert.
That's a very, very important. Grant, do you mind if I'm just going to ask one question? I'll go to you right after. It just is coming from one of our earlier panelists. So I'm going to read the question now, and then I'll give the mic to Grant. I've been listening for 3 days. Great show. I would like to hear about the future. Our government has backstopped the banks to the tune of 600 million. Instead of debating whether we should have backstopped, can you talk about the inevitable next problem? In 2008, there were plenty of these moments of feeling okay before the next shoe fell. And that's a question I've asked earlier. And before you answer, Robert, I just want to give a shout out to Danish and Jay for being our fact checkers for 10, 15 hours a day. So much respect there. But Robert, would love your thoughts on this point.
I mean, listen, I think it's imperative. I only can tell you what I've been saying. I said right away that the FDIC could give 75 cents on the dollar immediately. We know that the assets covered at least that amount. I think they should have made that statement on Saturday. I think it would have. So I think we have to make sure the narrative's right for the next thing. I also think that when you listen to, what people were saying, whether it was Mark Cuban or others, a lot of people are saying, well, we got to make sure we have payroll, right? I think we all agree that, deposits should be protected for payroll and those type of transactions. Like I said, there was the transaction account program. We have that. Congress can approve it. I mean, that's an easy fix. That way we're not kind of protecting.
Can you define that program, please? A lot of us don't know.
Yeah, the transaction account program was a program that we that was in during the Lehman crisis. So I think it was either 08 or 09, where they increased the FDIC limits that were aligned only to transactions like payroll. And they did that. They lost, eventually that jurisdiction went away, but, Congress can reinstate it. But there are tools we can do that all of us don't say, oh my God, we gave a windfall to, rich guy Robert Wolf. Okay. We don't want to make it a bailout. I think we want to make sure we wipe out the stockholders, that we look at the debt, appropriately versus as part of the liability stack. But then there are tools where, we can help depositors. I don't think it would be great if everyone went to 5 money center banks. That being said, that's the discussion being had by everybody today. Don't kid yourself. There isn't a company who's not talking about it.
Hey, Robert.
Grant, Grant had a question, so I want to give him the mic. I did interrupt him, but there is breaking news on the Terra USD